One of the most common questions that investors have is, when should I sell a stock? And the honest answer is never, if possible. For me, every company I buy, I have the intention to never sell it. But as I learned, there are definitely some times that it's appropriate to sell a stock. So in today's episode, we'll be going over all the reasons I think it's when it is appropriate to sell a stock. We'll also be getting some insight from legendary investors like Peter Lynch and Warren Buffett on when they think it is appropriate to sell a stock. I think that this is important to note that this is from a perspective of a long-term investor. Before the video starts, make sure you smash the like button for the YouTube algorithm and subscribe and turn on post notifications. I upload every Saturday at 3 o'clock Eastern, so you don't want to miss any of it. With all that out of the way, let's get right to the video.
Hello, I like money.
The first situation where you should sell a stock, in my opinion, is if you really need the money. If for some dumb reason you don't have an emergency fund set up and you get fired from your job or something crazy happens, this will always be some nice cash to rely on. But for this type of situation, you should always find a way to avoid from selling your stocks. The second time I think it's appropriate to sell a stock is when you think you can sell that quality to buy even higher quality. I actually have recently done this with my Clorox position. I sold Clorox and I used it to buy Disney, and I also trimmed my AT&T position and used that money to buy Apple. I think it's obvious that Disney is probably a better company than Clorox, and that Apple is a better company than AT&T. I wouldn't even consider this selling, I'd just consider it relocating the money. Warren Buffett emphasizes this in this clip.
Best thing to do is buy a stock that you don't ever want to sell. That's what we're trying to do. Sometimes if we need money to move to another sector, like we did last year, we will trim from some holdings, but that doesn't mean we're negative on those businesses at all. I mean, we think they're wonderful businesses or we wouldn't own them. And we would sell, if we needed money for other things. The Geico stock that I bought in 1951, I sold in 1952. It was, went on to be worth 100 or more times.
I am in no way bearish of these two companies I sold. AT&T has good long-term growth potential, and I can buy back in at these prices anytime I want. With Clorox, I was getting aggravated with the short-term volatility, and sold. I was planning to sell out of this anyway because I didn't have plans to buy any more, and I just used it to buy a really high quality in Disney. The third reason to sell, in my opinion, is if a crazy deal pops up. For example, a house down the street lists for like $10,000, or Apple stock falls 50%, and you don't have any capital, you already invested it. Sell one of your positions out and use that money to make more money. Obviously, a house isn't going to sell for $10,000, but you get the gist. Fourth reason I'd sell a stock is if there's a fundamental change or a dividend cut. A great example of this is AT&T. A lot of older people really relied on that dividend income for retirement, and they could even have felt betrayed by the AT&T management. That's a perfect example of a fundamental change. Another reason to sell, I think, is just personal reasons or moral reasons. Let's say tomorrow Apple hired O.J. Simpson on their board of directors, I'd probably sell out of the stock. Another reason is if you just want to trim your position because it's overweight. I'd also say this was another reason I trimmed my T position, but it was highly overweight in my portfolio.
The sell situation has changed over the years, because when I started out, I had way more ideas than money. I mean, I would go through Moody's manual. I went through it page by page, and then I went through it again page by page. And I found stocks in there that I could understand that were selling at like 2 times earnings, even 1 times earnings. Well, when you only have $10,000, that can get a little frustrating. And if you don't like to borrow money, which I never like to borrow money, so I was always coming up with more ideas than I had money. So I had to sell whatever I liked least to buy something new that just was compelling to me. And for a long time, I was in that mode. And now our problem is we have more money than ideas.
This is a strategy that I've personally used recently when I need capital. I pick about 5 companies in my portfolio that I do not love 100%, and if buying opportunities arise, those are the most likely that I'll sell to get capital. And my last reason is if the company is hugely overpriced. Now, for one of my favorite positions like Apple, it would take a lot for me to sell it. But if I can sell it, use that profit for more dividend-paying stocks, and buy back in when it's cheaper, I think it's worth it. Now, here's Peter Lynch on what has to happen for him to sell a stock.
You presumably were under the same pressures as other fund managers to show performance results. Right. Did that incline you to sell too quickly sometimes?
Well, I think my greatest mistakes are, I mean, you know, it's funny in a stock, all you can lose is 100%. I've done that. And your great mistakes is selling a good company, and then it doubles, then it triples, and it quadruples, because you make a lot of mistakes, and so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes are just saying, oh my God, this stock is too high, and I was wrong. And you had to figure out, what inning am I in this baseball game? I sold Toys R Us way too early. It went up 20-fold after I sold. I did the same thing at Home Depot. Those are probably my two greatest mistakes I ever made.
When should you sell?
Well, you ought to find out why you bought a stock. If you're saying if it's a cyclical company and they're doing poorly, and they're doing awful, you wait till things are getting better, and they're doing terrific, and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. Because they still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, they went around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. You ought to be able to write that down and follow that. That's what I do with the company.
To recap this video, so if anything crazy happens, you need the money, you sell the stock. If anything fundamentally crazy happens or morally for you personally happens with the stock, sell it. And if something crazy happens, sell the stock. I want to thank you all for watching the video, and before we end, I just want to let you guys know that we're uploading every Saturday at 3 o'clock Eastern Time now. This is because I am in school Friday at 3 o'clock Eastern Time, and I like to, you know, I've realized in the YouTube algorithm you gotta have a fast start to your videos for them to do well, so I can have more control over, like, the promotion on Saturdays. And that's the end of the video. Thank you guys for watching. Make sure to smash the like and subscribe again. Thank you. Have a good day.